So I'm going to run, I know I'm getting a little bit behind, but let's talk about departments. So we looked at clients, but now we need to look at our departments, okay? And if you're above 50 people and you're not looking at department profitability, you should be, okay? And the reality is that it doesn't mean that at least accounting needs to be looking at it. And I'm not saying that you need to go and put it with the department heads. In some agencies, department profitability starts a competition that isn't healthy. So I'm not necessarily saying you want to do that. What I am saying is accounting needs to know this information. Okay? You may choose to share it, you may not. But you need to know it. So what we want to look at with department profitability in particular is we want to look at what are the top 5 factors that are affecting my department profitability. I have utilization. I have gen admin time. Number 1, dumping in gen admin. People don't have enough work to do. Where do they dump their time? They dump it in gen admin. Because people are going to catch it if they dump it on projects. So they dump it in gen admin. Now you're going to see that with the utilization gap, of course, right? But that's a big piece of it. How much of that is gen admin? And that's usually the sign that they don't have enough work to do, or there's a throughput problem. There's realization, which is unplanned. We break it between unplanned and planned because you can't really ding a client for planned write-offs. That means you wanted to invest in them. But it does lower their profitability and it affects it across the organization. So we want to separate unplanned and planned because they have different meanings, right? It's the unplanned stuff we really need to focus on. But a lot of people have a problem. They have so much unplanned, they don't get to make planned because it's all being decided for them by poor scoping or account people who are giving the farm away to their accounts and nobody catches it until it's too late. And then, of course, what's the rate ratio, right? That rate ratio is the focus of your net cost of your employees to the rate you're charging for them, right? And at the end of the day, you should have 2.5 to 3x. And if you don't have 2.5 to 3x, then you're either paying people too much for what you are charging them out for. Now, so that's a really important thing to think about is my rate ratio set properly? And in many cases, it's not. It doesn't mean that your most expensive people will always pay for themselves. But that department overall ideally should cover themselves and should have a reasonable rate ratio. So you need to be looking at that. So then you should be comparing the margin per FTE and the margin per hour to your financial model. When you build a financial model, you should have projections for these two things. And you should be able to compare this to that and compare each of the different departments, which department is dragging this down. Because just because a department is big and they have a lot of contribution margin, that doesn't mean that they're efficient. So I can have a huge department giving you a whole bunch more money, but I can have a smaller department that's run much more efficiently and per dollar is giving me significantly more. They're just not as big. So you need to be looking at that and really looking at those inefficiencies. Okay? So, and then we have to ask ourselves, do my billable departments cover my overhead departments? Because that's another big problem, right? And so what we can do here is we can actually allocate the overhead department into the billable departments and now see where everybody stands. Okay? So the profitability obviously changes when you allocate that. Okay? And you can now compare each of those departments side by side with that allocation, and you should be looking at focusing on that AGI and that gross margin, right? Revenue, billings, whatever. But that's not really it. Don't focus on the top line. All the agencies that I know that focus on the top line, they have the lowest net profit. Focus on your AGI, focus on that gross margin number, right? My revenue minus my COGS is my agency gross income, minus my direct labor, my direct freelance labor gives me gross margin. All your profitability problems are between revenue and gross margin, I promise you. Very few agencies have OpEx problems. It happens, it's really rare. If you want to make a change, don't go buy the one-ply toilet paper. That is not going to solve your problems. I promise you. That overhead is not the issue. The issue is between revenue and gross margin. Fix that, and you can have however much ply of toilet paper you want. Kidding, kind of. But I mean, a lot of people are like, let's cut our expenses, Okay, stop giving people soda and stop, no more, Bagel Wednesday. That is nothing. When you looked at that financial potential the other day, the total financial potential was greater than all OpEx costs put together. That answers your question. Your problem is not in OpEx. Your problem is in your revenue through your gross margin. And that is where you need to focus. And you need to be able to cut that by department and by client to really analyze and find that problem. So we can use scenario planning in the department world to say, what if we did this? What if we actually hit our utilization targets and we recaptured all of our unplanned write-offs? We'd get another $1.9 million, and we can see for each department where that needs to be. Okay? We can recapture all of that opportunity cost.